Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about the next 20 minutes here. Uh, put some oomph into our Pinterest trade this week. Probably the most bullish trade that we have done, or that I have done on Options Guide TV. And yeah, it didn't work out. Looked at doing a skip strike butterfly, but I didn't like it. Once again, lower price stocks are just harder to pull things off. I prefer stocks. I'd love it to go back to the day when Amazon and Google were over $1,000. Those were awesome stocks, but they're high enough now that they make it feasible to be able to trade them. On the pins trade, we're down a little bit. They had solid earnings. But once again, the forecast didn't come over well. So the stock was doing pretty well until the conference call afterwards. And it was perceived a little bit more negative. But, the fundamentals are solid. It's not a bad underlying to just buy. If you want to get long in the short term, a little bit conservative, it's not overvalued. Expected a little bit more of a pop. The net margins on pins, as I mentioned, I think on last week's show, it's a very well-run, efficient company, and but we're down 8% on the day. It was actually down lower to start, and our position, we ended up doing a butterfly, and that position isn't doing that great. So let's run to the Tradier Pro software, and I'll start showing that position. 1 second. Thought I had it in there. Okay, so we don't have the pins trade in, but that's fine. This is the VIX trade that we were looking at. So the pins trade, I'll just have to go back and set it back up. I don't know where it disappeared to. We were looking at on pins. We had the 40, 44, and 46 strike. And I can actually just show them to you because they're trading for nothing. 40, 44, and 46. Now, the other alternative was to give it a little bit more time on the butterfly. And that trade is probably, no, that's not trading for much either. 40, 44 still doesn't have anything, and 46. So neither of, if you did the short, the August expiration, August 8th, or the August 15th expiration, the trade's just not going to pan out. We needed a bump up above the 40 level in order to get that, and obviously we're down. So the trade didn't work out. That's straightforward. Had so far since the earnings, just in general, have been fairly solid with a lot of the trades that we have done. I also went in and looked at the Caterpillar trade. Now, we did a skip strike butterfly in Caterpillar, but Caterpillar opened up a smidge, but recently the stock is actually traded off once again. So stock has ran down quite a bit. If you look at the chart in Caterpillar, let me pull that up. You see that we did have a small pop up, but man, we came screaming back down. So as I mentioned on the show, I actually put on a open wing butterfly to the downside on Caterpillar. I decided against doing the skip strike butterfly that we actually did on the show, and that actually paid out. I had a limit order in to sell at $6. The maximum was $10 on the trade. Put it on for about $2.20. And I just had a limit order in for $6, and it got hit the other day. If I would have went ahead the limit order in, I might have been able to get more, but I was more than happy to take that 6. So not a problem. Stock came down, and now it's trading right here. So that was my Caterpillar trade. And the butterfly that I had on, I guess I can put it in, 418. So I'm interested to see where it's at, actually. Let's look at this is the Caterpillar butterfly that I put on as an alternative to the skip strike that we talked about on the show. So we bought the 430s, sold 2 of the 420s, and bought 1 of the 415s. So we stopped short on the 415s. That opened up that wing. And yeah, so there you go. I got 6, and now it's trading at 4. So if I would have, once again, pigs get slaughtered if you stick around. It did trade higher than 6 at one point in time when I took a peek at it. But right now it's trading for $4.58. 420 is the magic number. So from 430 down to 420 is 10 points. That's the maximum that it can trade for. And then from 420 down to 415 is 5 points. All right. So that's the trade that helps pay for the long call spread. Stop short. If we did a standard butterfly, you would be down to the 400 actually, the 400 strike in this instance. So what did we do? We did, let me look at this. 430, 420, 415. Okay, so let's send this to the what if calculator. Just looking actually at my execution. $2.30 was the net debit. So in this instance, from here on down, you're profitable. Now, it's worth how many points? This is 10. Yeah, it's worth 5 points. So this would have been 430, 420, 410. But we stopped short. We bought the 415. And because we bought the 415, if the stock goes down below 415, at expiration, this butterfly would trade for at least $5, which is the difference between the width in this strike of this long spread and the width of this short spread that makes up the butterfly. So it would have been trading for $5, paid $2.30 for it. That means I would have made $2.30 if it finished anywhere below $4.15. Now, this is in an underlying stock, so you do have to close it. You don't want to get exercise in the sign and deal with all that stuff. So you would have to close it out, and you would have to pay a little bit to get the trade closed, because they're not going to give it to you for the, without paying bid-ask spreads, etc. So in that instance, but this was a trade. It was an interesting trade. I'm obviously glad that I switched up from doing the skip strike, but the skip strike paid you out. And it was very interesting after earnings. So the skip strike on the butterfly, the stock opened flat, and that's ideally what you want on a skip strike butterfly, and then started to drift up towards the peak of our butterfly. Well, it didn't make it all the way, and then it started to retrace. And I was just kind of anticipating that it might retrace just in general, because their earnings report wasn't that great. And it needed to be great because of the parabolic move that was in the chart. Like, look at how this went up so much, and they broke through that all-time high, and now we're back down below that high. So in this instance, if we can get back to this level at the 14-17 range and make a strong move above that, well, then it's okay to start to get bullish again, especially if it tests that line quite a bit in that instance, but still have tariff concerns. It's a solid company, well-run company, but yeah. All right, there we go. Enough on Caterpillar. Now, the next trade that I want to look at is the VIX trade, because that is coming along, and we did get long some VIX options. And I do know that I just want to kind of point out that the DV, which is an ad that's been added to the Tradier platform, means it's a derived value. Okay, so the VIX index is tracking the nearest term futures contract more so than it is the actual index. So you can get a little bit of a discrepancy. And they're also doing that inside the SPX, the Russell, and the NASDAQ. Those are just... it's just noise, because it's going to come to a very close valuation. The VIX is a little bit off because of that. And that's a new thing that they added to the platform to actually allow real-time quotes easier across the board, because the indexes are very expensive, and hence the reason, because they're exchange-driven and they're only on one exchange. And that always affects the cost of the pricing across the board. Okay, so VIX. Let's look at the VIX. And we sent the trade to the what if calculator. So here is the short put spread that we had on the VIX. And we're coming up to the August 20th date. We got about 10 days away. Let's add this to the ticket down here. It's at 76 cents. We put it on for 55 cents. The market is right around, let's call it 16. 1587 is actually where the VIX is at right now. And we need it to finish above 17. There's a lot of news that is happening over the next couple of weeks before we get to this. I'm still okay with this trade. Time decay is still your friend on it. Let's go back here, look at this and this up here. August 20th. You got 84 cents in this option contract. The futures contract is trading right now at just about 1750. So the futures contract is right between 1700 and 1750. And here's how we figure it out. Remember, we look at the asking price. The asking price is $1.15. We look at the asking price of the put. That's 87 cents. This is where it switches. The put becomes more expensive than the call. The call is 97. The put is here. That means that the future is trading somewhere between 17 and 1750. The actual VIX is around 16. We put it on for 55 cents. It's trading for 75 cents. Time decay is going to be our friend here as the expiration approaches, but we do obviously have the risk if the marketplace goes down. So any movement up in the VIX, we might want to think about taking that off. I still think that the VIX trading around 16 in this market environment with all the concerns that we have going on is too low. I think that there should be more. There's too much complacency in the marketplace, and that bodes scary. That makes things scary going into just this time of year. August last year was extremely volatile, and then September and October added to the volatility. So we had a very volatile September, October, August, September, and October last year. And I think that we're kind of set up for that. Not necessarily saying that we're going to finish down, but I just do expect a few downturns going into the market, especially with the complacency in the marketplace and still all the headwinds that we have. Now, earnings were solid. They were solid. Forecasts were right. And that kind of happened with Pinterest. They had solid. I think they were a great example of that. And Caterpillar too. Caterpillar was in the same range. They didn't have they had solid earnings. They needed to blow it out considering the movement in the underlying stock. But they still had, once again, their conference call was concerning afterwards, and that kind of prevented the stock from making a strong move to the upside. All right. So, you know what I'm thinking I'm going to do today? It is Friday, obviously, and we're running into the weekend. So as opposed to try to look at earnings next week and try to set up an earnings trade, which is common that I've been doing as we've been in the middle of the earnings season. Obviously, I don't think that earnings is done until we see NVIDIA's earnings, and that is the beginning of the end, right? But obviously that is the biggest earnings, and whatever they say in their conference call can affect all the stocks in the tech world, who's buying them, who's not buying them, where they're selling them, et cetera, et cetera. And so today I'm just going to do an SPX trade. I want to do a 0 DTE butterfly. Markets are, I'd like to put this on a little bit earlier. I think we're a little bit late in the day at 11 o'clock. I think 10:15 is about the time, and it really does matter in the 0 DTE. But if you look at this SPX and you look how much premium is on the at the money call, right? So this is $1 in the money. Well, let's just look at the put side. That's $1 out of the money, and you've got $7 of premium that has to go away by the end of the day today. This is an out of the money option contract. There's no time value in it whatsoever. It's a cash settled index, and it's trading for $7.50, and that time premium has to go away. So we're going to use the call side of things, and I'm going to ask, do we want to lean bearish or bullish? Where do you want to be? Or do we want to just be neutral? And I'm going to ask the crowd, if you're out there in Never Never Land and you want to participate in my reindeer game, please run to the comment section and say bull, bear, or new for neutral. And I don't care how you spell new. If you want to take a peek at it. Is there anybody out there? All right. If not, I'm going to, there might be a little bit of a delay. I'm going to, I kind of think I want to lean neutral on the market. We're up 0.5% right now. Neutral to slightly bearish from here. Well, Anthony's first one to kick in, and yes, and then we can put in Dimage. If I butchered that, I'm sure. And we got a bull. Neutral to slightly bearish. All right, let's set it up with a bear. I still we can't continue to just try to set new highs, and I don't think that's feasible. But it's awesome. There's nothing wrong with new highs. We don't mind that at all. All right, so let's look at it. Let's do the 68.30. We're going to go 10 points wide, I think, right now. Like I said, you might be able to go 15 points if we would have did a little bit earlier, but we're going to look at $6 or $7 if we go 15 points right now. All right, so let's do it. We're going to do an open wing to the downside. That's what we're going to do. It's going to be neutral. And then we'll go 5 here. Yeah, so that's a feasible trade. You're paying $350 for it. And I'm going to send this to the what if calculator. And you got 5 points here. So like this needs to be done right now. Because if we wait to the end of the day, I don't know what's going on with the calculator there, why that line is like that, but that doesn't matter. Let's auto zoom. This is where we are at. We need the market to stay within this range. And if we do drift down, I don't mind this. We're paying let's say, gosh, look at that thing move. Let's say 330. I think 330 is feasible. Then that leaves 70 cents to 4 and then 5. So 170. This would be trading for $5. Well, it's saying 155, but if we get it at 330, so it depends on what it grabbed when it came into the what if calculator, but it's saying 155. So this would be, if we executed this at 330, we would be at 170. And realize that if you put this trade on, time decay is going to be ginormous on the at the money option contract. So every hour that goes away, theta decay is going to be large. You stay within this range, we're fine. We drift south, you can just let it go because we're not worried about if it comes back later in the day. We don't want it to obviously finish above this level, but if you flip the script and our other attendee that said they wanted to be a bull, you just flip it and you go the other way, and it should be trading for about the same dollar amount. But you wait 1 hour, this trade is not feasible. This trade will probably you'd be paying $6 or $7 for a 10-point wide butterfly, and that would be tough. So we can look at the other one too here. I like this one as of right now though, and then let's go look at let's look at 15 points wide and see where we're at. Actually, I think I can just let's adjust it over here. I don't want to screw up that calculator. Okay, so let's clear it out. We're going to go 15. So we're going to start at 15. Now we're down a little bit. I liked it better when it was right at the money at 63.80. Okay, let's clear it out. We're going to do 63.80 though. I don't think I want to go to 75. Man, the market's screwing up my numbers. Okay, let's do the 80 just to keep it the same. So let's look at 15 points wide. It'll probably be double what we paid. Ask, bid, and then see, now here's where it's tough because we really need a 7.5 point strike, but we don't have one, right? So either we go 10 points and that leaves 5. So if we go 10 points, we got to pay less than 5 for it to be profitable. So that doesn't work. So we really need a 72.50 to make this one work. 76 now. Yeah, we got to adjust this. I'm sorry that we can't make apples to apples, but we got to adjust it. It moved too much down. So 7, here's what it would be. This, come on in and go down 15 points and buy. And then we got to go 5. We got to go 5, and we're going to have to pay too much for this. And buy 630 for 15 points. Well, I guess that is almost double. And then this is worth 10 points. So let's send this one to the what if calculator. A little bit more upside. Pull this down, zoom in. So we're here. So our max risk is now, if we do just one, is $6.53. The max upside is $15, or the maximum I could trade for is $15, which puts our max upside at about, well, here it says 880. If you keep your eyes over here, 880 based off of the price that they grabbed from when it came in here. We'll come in and we'll say 6. Man, we're moving. Good call on the downside, Anthony. So 625. 630. Let's go 630. That would be the paper trade on it. I like the other one better. I'd rather do 2 of those than 1 of these, with the way the conditions of the market are. Now, what made this a little bit more expensive, this is 10 points wide, and 7.5 would be good, and then we'd be close, to where we're at. But every single minute that you delay on this, right? Like I said, I would have put this on at 10:30 as opposed to 11:30 today. It is big. And then also realize that the last hour of the day, you want to get out. It is a cash settled index, which is huge in that you can just let it run if you would like, especially if the market starts going this direction. We're not that worried in the last hour. We just don't want to fall asleep and let it blow through our strike to the upside. But time decay is going to be a huge factor in the last hour. And that also means that delta and gamma are going to be extremely strong too. So you don't want to fall asleep the last hour. If the market goes this way, you can close it if you would like. If not, there's no necessarily a reason, because you're not scared until it comes back beyond your strike and starts moving in this direction. Any questions on that? Okay, Amber wants to be bullish on this too. Well, 750 up 30. I think the market's just going to kind of stay where it's at and flounder around. That's really where I think it's going to be at. So the other alternative, we'll do the bull side. I got a couple of bull votes in here. Go ahead and show a few of those if you would like. But right now, if we did it the second that we said on the put butterfly, which I do like the not as wide butterfly. It's 767,370. So we're up about 30 cents on the trade. I think that's legit. It's staying there. There you go. And every minute that goes by, we're going to have a huge rate of time decay. Okay, so let's look at the if you want to get bullish here, let's set up a bullish trade, and then we'll call it a day. We'll go 10 points wide. We're at 77. I'd really like it to be right at the money, and it's not. But so we'll just do the 10 points wide, and we'll go here. 77 is a little bit in the money. Let's do the 75. 63, let's buy this. Sell 2 of those, and then go 5 points and buy one of these. 415. That's 2 points in the money. Okay, if we shift it down, does it go down to 3? Okay, buy. Then these would be out a little bit. Sell, and buy. Now we're down to 360, but you see how fast time decay is happening on this trade. So now if we do that one, we're at the same price. Let's send that to the what if calculator. That's a tough one. It's battling. And this is the way it looks. If we get it done for 4, the maximum it could trade for is, yeah, you're looking at $1 now. If you look at this trade, that's you're putting it on for 4. If it goes up, you make $1 because the maximum it can trade for is 5. Comes down, the most that it can trade for is 10 minus 4. We'll call it 4 to make the math simple, would be $6. But you're really seeing time decay happen in real time as this goes. I like the first call. I'm glad we went with that, Anthony. Neutral to slightly bearish. I do kind of, my view on it will be that not much is going to happen going into the close. But you never know, especially in this marketplace. Headlines are flying all over the place and happening nonstop, even on Fridays, right? Fridays used to be a day where there was very few headlines, but that is not the case anymore. So with that said, that's going to be it for this edition of Options Guy TV. I will screenshot. We'll make the official paper trade, our initial put butterfly that we put on, and I will look at it at the close and see where we end up at. And we'll talk about it on Monday. So make sure you tune in this Monday, 11 a.m. Eastern time for the next edition of Options Guy TV. And thanks for stopping by.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.